Hello and welcome, everyone. We have something a little different for you today. This discussion has been put together with a pro-tax accountant, a really well-respected firm. You know them here in the UK, and
It's indeed.
we want to spend some time today really getting into the nitty-gritty of what the Spring Statement 2025 actually means for you as a taxpayer, as part of a household here in the UK.
Right.
We're going to dig into those key announcements and really try to unpack what you need to know.
Yes, sounds good.
What do you think? So, the Spring Statement this year comes at a time when things globally feel very uncertain economically.
Yeah, totally.
And obviously that has a knock-on effect for the UK's public finances and the economy as a whole.
Absolutely. I mean, the government has said that their aim is to try and provide that sense of security for working people. And they've talked about this idea of national renewal
Right.
through what they're calling active government intervention. So there's a lot to unpack there.
There is a lot to unpack. We're going to be looking at the government's perspective on the economic and fiscal outlook and those key policy decisions that are likely to impact us all directly.
Yeah.
And then the overall kind of direction of travel that this statement seems to be signaling. So let's start with the big picture, the economic and fiscal outlook.
Yeah.
What are the key things that we need to be aware of?
So the government operates within a set of fiscal rules, and these are really the foundation for understanding their approach to managing the public finances.
Right.
You've got the stability rule, which is a commitment to balancing the government's day-to-day spending with its income by the financial year 2029 to 2030.
Okay.
Now think of this like balancing your household budget. It's about ensuring that income matches spending.
Right. Makes sense.
And then you've got the investment rule, and this aims to see the UK's overall debt as a percentage of its economic output falling by the end of the forecast period.
Okay. So debt going down in proportion to the size of the economy.
Exactly.
And remind me, when we look at the stability rule, the one about balancing the books, wasn't there initially a projection of a gap?
Yes. So initially, the Office for Budget Responsibility, the OBR, they're the independent body that forecasts the UK's economy.
Right.
They initially suggested there would be a deficit, but the measures that have been announced in the Spring Statement have actually created what they call headroom against that stability rule. So essentially, it's like having a buffer or a bit of wiggle room against that target. And the projections now show a surplus in the current budget from 2027-28 onwards.
Okay, that's interesting. So a surplus rather than a deficit.
Precisely. So we're looking at a projected $6 billion surplus in 2027-28, rising to $7.1 billion in 28-29, and then reaching $9.9 billion by 2029-30. So pretty significant turnaround.
It is a turnaround.
Yeah.
Quite a big swing.
Yeah.
What about the investment rule, the one about bringing the national debt down? Is that on track as well?
Yes, the investment rule, which focuses on reducing net financial debt, is also projected to be met early in that forecast period. And net financial debt is expected to fall to 82.7% of GDP by 2029-30. Now, GDP stands for Gross Domestic Product. It's the total value of goods and services produced by the UK economy.
Okay.
This actually gives a headroom of $15.1 billion against that particular target. So the government appears to be meeting both of its key fiscal rules.
So they're hitting those targets. Now, I think this is where it gets interesting for a lot of taxpayers. The government has talked about increasing investment in HMRC's ability to crack down on tax avoidance.
Yeah.
What's the thinking there, and what sort of impact could that have on people listening?
It's a really interesting point. So the government is focusing on reducing what's known as the tax gap, which is basically the difference between the amount of tax that should be collected in theory and the amount that's actually collected in practice. They're aiming to increase the number of tax fraud charges by 20% every year.
Wow.
And they project that these efforts are going to raise an extra £1 billion in revenue.
And is that likely to focus on big companies, or is that individuals, or is it a kind of across the board?
Well, it's likely to be across the board. I think they'll be looking at large corporations as well as individuals, anywhere where they see evidence of noncompliance.
Okay. So if you're a taxpayer listening, keep your nose clean.
Absolutely. It's about ensuring everyone pays their fair share.
Right. Now, we've also heard about these welfare reform plans. How do they fit into the overall financial picture?
So alongside the efforts to increase revenue through tackling tax avoidance, they're also looking at the expenditure side, and the welfare reform plans are intended to make the system more sustainable in the long term, and also to support more people to move into work and stay in work. The government believes this is going to reduce welfare spending as a proportion of GDP over the forecast period.
Right.
So it's about trying to reduce the burden on public finances while making sure support is there for those who genuinely need it.
Okay. So that gives us a good overview of the economic and fiscal landscape.
Hmm.
Let's turn to some of the specific policy decisions that are likely to affect UK taxpayers and households more directly. One of the big announcements was this increase in defense spending, wasn't it?
Yes, that was a significant announcement. The government has committed to increasing defense spending to 2.5% of GDP by 2027.
Okay.
And to reach this goal, they're allocating an extra £2.2 billion to the Ministry of Defense in the next financial year alone.
Now, I understand that that increase is partly being funded by a reduction in the amount that the UK spends on overseas aid. That seems like a pretty major shift in priorities.
It does, and it reflects a changing global landscape and the government's assessment of the current security environment. The decision to reduce overseas aid to 0.3% of gross national income is directly linked to freeing up those funds for this investment in defense.
Right, so they're taking money from one area and putting it into another.
Exactly. It's about reallocating resources to meet what they perceive to be the most pressing challenges.
Now, we also heard about plans to reform the way the government itself operates to try and make it more efficient. What does that actually mean for how public services are delivered?
So there's a big focus on driving efficiency and productivity across government departments.
Okay.
A key part of this is the $3.25 billion transformation fund, and the plan is to spend this money in a number of areas. They're looking at voluntary exit schemes in the civil service to potentially reduce the size of the civil service.
Okay.
They're also investing in AI tools to try and modernize government processes.
Okay, so some quite big changes there.
Yeah, and there's also investment in technology for probation services to improve their effectiveness and in increasing support for children in foster care. The goal here is to generate further savings,
Right.
which are projected to be around $3.5 billion per year by 2029-30.
Okay, so the idea is that we make these upfront investments now, and that leads to longer-term savings and potentially better services.
Exactly. It's about trying to create a more efficient and effective public sector.
Okay, let's move on to something that's a bit closer to home for people listening, and that's inflation. What's the forecast looking like?
Well, the OPR forecasts that CPI inflation will average 3.2% this year. Now, CPI stands for Consumer Prices Index,
Right.
and it's the key measure of inflation that we all tend to focus on. The good news is it's expected to come down relatively quickly to 2.1% in 2026,
Okay.
and then to meet the government's 2% target from 2027 onwards.
Now, what about the overall growth of the UK economy? What are the projections there?
Well, the GDP growth forecast for 2025 has been revised down slightly to 1%, but the OBR has upgraded its forecast for the years after that, with projected growth of 1.9% in 2026, 1.8% in 2027, 1.7% in 2028, and 1.8% in 2029. And interestingly, the OBR has said that the government's planning reforms are expected to have a positive impact on the economy in the long run.
How so?
Well, they're saying that those reforms could permanently increase real GDP by 0.2% by 2029-30, which is about £6.8 billion, and by 0.4% within 10 years. So adding a further $15.1 billion to the economy.
That's quite a significant impact.
It is, and it's thought that by making the planning process easier, it will unlock more development and more investment.
Right, and those planning reforms are also connected to the government's aim of building lots more homes, aren't they?
Yes, they've set this ambitious target of reaching a 40-year high of 305,000 new homes being built every year, with the aim of building over 1.3 million homes in the next 5 years.
That's a lot of houses.
It is, and it's directly linked to these planning reforms that they're hoping will make it much easier and quicker to get building projects approved.
Okay, and I understand there's also investment going into social and affordable housing to support this increase in house building.
Yes, absolutely. So recognizing the need for more affordable housing, there's an additional £2 billion being invested in social and affordable housing next year, with a target of delivering up to 18,000 new homes.
Okay, and that's on top of the other house building targets.
Exactly. And in addition to that, there's over £600 million being allocated to training 60,000 more construction workers.
Right, because they're going to need more people to build all these homes.
Precisely. And this includes setting up 10 new technical excellence colleges, which will specialize in construction.
Okay, so lots of investment going into the construction industry there. Now, I think this is something that everyone listening is going to be interested in. How is all of this going to affect people's finances? What's the outlook for household disposable income?
Well, the OBR has actually confirmed that real household disposable income is now expected to grow this year at almost double the rate they had forecast in the autumn.
Wow. Okay.
So that suggests people could see their financial situation improve by over £500 a year on average.
That'll be welcome news for a lot of people.
Absolutely. And this positive revision takes into account the effects of inflation on people's earnings.
Okay, so that's the good news. We've also heard about more measures to try and close that tax gap we were talking about earlier. What else is in the pipeline?
So on top of those investments in HMRC staff and technology, there are several other things that are being done to try and reduce the amount of tax that goes uncollected. They're going to increase investment in HMRC's ability to manage tax debt. Okay. And they're going to continue to increase the number of compliance officers.
Right, so making sure people are following the rules.
Exactly. And the penalties for late payment of VAT and income tax self-assessment are also being increased as these tax systems become part of making tax digital.
Right.
The overall aim is to raise over £1 billion in additional gross tax revenue each year by 2029-30.
Okay, and that making tax digital thing, that's being rolled out further, isn't it?
It is. The rollout of making tax digital for income tax self-assessment for individuals with incomes over £20,000 will take effect from April 2028.
Right, so more people will be brought into that system.
That's right.
Now it seems like there's also a focus on providing more support for people to find or stay in work.
Yes, absolutely. So from 2026-27, there will be increased investment in employment health and skill support scaling up to £1 billion a year by 2029-30.
Okay, and that's quite a significant sum of money.
It is, and it's intended to offer more support to people to help them enter the workforce or to stay in work if they're already there.
So help with retraining and things like that.
Exactly. And along with that, we're also going to see the restart of the reassessments for work capability assessments.
Right.
And there will be increased capacity for reviewing personal independence payment awards or PIP awards.
And just to remind people, PIP is...
PIP is a benefit that provides support to individuals who have long-term health conditions or disabilities.
Okay, so some significant changes there. Now, finally, we talked earlier about public sector reform. Are there any other key aspects to highlight?
So just very briefly, as part of this push for public sector reform, NHS England is being brought back under the direct control of the Department of Health and Social Care.
Right.
And there's a target to cut the administrative budgets of government departments by 15% by the end of the decade.
15%? That's a lot.
It is. And the aim there is to make sure that resources are being focused on frontline services.
Okay, so to sum it all up for everyone listening, what are the main takeaways from this spring statement?
Well, I think the key message is that the government is trying to signal a focus on economic stability alongside increasing spending in certain areas like defense and housing. There's big emphasis on reforms to try and improve efficiency within government and to support more people to get into work.
Right.
And we're continuing to see changes to how tax is administered and ongoing efforts to try and clamp down on tax evasion.
Okay.
So the overall picture is a bit mixed. The immediate economic growth forecast has been revised down a bit, but there are some positive projections for how much money people will have available in the coming years.
So some good news and some not so good news, but overall it seems like the government is trying to strike a balance.
Yeah, I think that's fair to say.
Any final thoughts?
Well, I think the main thing is this spring statement sets out a strategic direction in what is a very complex and ever-changing global environment. Understanding the details of these changes will be important for all of us in the UK as we navigate the years ahead.
And I think that's a great point to end on. We've covered a lot of ground today, and hopefully this has given you a clear idea of what the spring statement means for you.
I hope so.
If you have any further questions about how any of these changes might affect your specific circumstances, we strongly recommend you reach out to the experts at ProTax Accountant.
Yes, good advice.
They can provide tailored advice based on your individual situation.
Absolutely.
Thank you so much for joining us for this important discussion.
My pleasure.
We'll see you next time.
Be then. Bye.